Hello, I'm Tyler Chanelli, founder of Options Trader Club, and I want to welcome you to this live trading room preview where you're going to see a glimpse of an over 1 hour live trading room session that I do on a weekly basis inside the club. Now, in this live trading room preview, you're going to learn about a lot of different strategies and thought process and the way that I approach the market and a lot of other full-time professional traders. And this Options Trader Club is a brand new community that I launched last year, at the end of 2015. And it's a place where you can tap into other like-minded traders. It's a social network-based community with a live chat. We have SMS trade alerts. There's a whole host of educational resources and things that can further your development, your confidence, and your wherewithal to make smart trading decisions. So I hope you enjoyed this quick live trading room preview. And if you ever need any help or anything from me, please don't hesitate to reach out, leave a comment, ask a question, and I look forward to serving you inside the community. This is the first live trading room for 2016, so welcome all. A lot to go over today. We're going to do a live market analysis and talk about what happened for this first trading day of 2016. Also do a quick update on some of the open trades on Facebook, Amazon, Marriott, and the Russell 2000. Earnings will be starting to come out at the end of the month, and that'll be a very market-moving type event that will help either A, make up the ground that we're losing out of the gate, or bring prices lower. Also talk about shorting China because a lot of the information and market data coming out of China is very bearish. The first one right here is the diamonds. This is a weekly chart showing some Fibonacci levels that I just put up, taking the recent high of 183 down to the low in August of 150, showing that we definitely are at this very pivotal 61.8% level, which if it could hold today, the market was down about 350 on the Dow about 20 or 30 minutes ago. We've had a pretty big sell-off. So this retracement right here is showing what's happening right now. It's a 5-minute chart. So all I was looking for today was for the clarity to see if we were going to make up some lost ground today, or if the markets were going to stay in this 400-point down move and close at the lows of the day. And the reason why we're looking at this is to gain clarity and understand where the markets are heading this year. So there's going to be a lot of volatility, and I'll talk about the VIX here in a minute. But right now, the diamonds is a good starting point to start this discussion process. But the Chinese manufacturing data was weak, and their currency is being devalued at a very fast rate. So because China is the second largest economy in the world, they have a lot of market moving power. We talked about last trading room. We have the China ETF FXI is probably the best ETF to trade that's liquid for options. And this is showing you this huge sell-off here that happened from 35 to 34. Doesn't seem like a lot, but this is, again, something that is going to be American-based ETF that trades the Chinese large cap index. So if you're bearish on China, and if we look at this on a longer term time frame, it's certainly been in a downtrend. We could easily head down another 25, 30% to where we see this price level down here where we hit in 09 of roughly 20 to 25 on this ETF. So there isn't huge downside on this because it's a lower price ETF, but this is certainly something that we can use to gain the insight of how this is trending. There's 4 open trades right now. It's the Marriott trade, which is getting hit really hard today, and the Russell trade, the Facebook and Amazon. So out of these 4 trades, some of them were doing well into the end of the year, and some of them were kind of suffering a little bit, but nothing like today where everything's completely negative. It's going to be an interesting thing for me to trade through this. And part of knowing when to pull the plug is when your Greeks completely change on you. Now, when we have a 400-point down day, this opens up a whole new discussion to where when you have a trade on, like on Facebook or Amazon, and you go into a trade where you have a specific trade risk that you're going to allow yourself to lose. And when you have a gap, this is the biggest trading risk that we have as traders is when the markets close and then you have no control when you have a lower open or a gap down like we saw here. These gap downs and gap ups, they act as very critical levels that we can trade into and get better clarity. The one thing that I do like about the sell-off today is we could be setting the way for some great discounts and also getting a point where we can slowly grind back this loss into the first 2 weeks of the year, which is fine because if we have the VIX this high, it makes for a great time to sell credit spreads. Right now, it's kind of a wait and see game to see how we can confirm tomorrow. If it continues lower tomorrow, then that's probably going to set the stage. We're going to be trading down to this 165 level. The 165 level is where we have the other gap back in October. If you use the Fibonacci's, it lines up perfectly just about in this range. And because this is technically the next stopping point where we're at right now, 170 roughly, 165 would be the next one. Because we opened down from 170 174 to 171. That's a 300 point lock limit downside move where the market opens 300 points lower, trades down another 150 points lower than where it opened, to where if we could have seen a small real body, that's the type of candlestick formation that I was looking to see today to kind of ease some of the worry about seeing prices move lower when you have a lot of positive deltas is not the right relationship you want to have. All the markets trade off the futures. So when you see the Dow futures or the S&P futures, NASDAQ futures, you see those pointing down like this morning, down 300 points. The market gapped down and opened 300 points lower. So the futures are absolutely critical because not only do all the other countries use them to hedge their accounts, and the US futures markets are the largest, most liquid, powerful securities in the world. And all of the US equities trade off of the futures. The futures are the backbone to the financial markets. This is the first time in the history of the US stock market that we've seen this bad of an open for the beginning of a trading year. Because of the gap downs and the huge moves, these trades are suffering very bad. And this is a great example before we jump in to really reinforce the importance of following a strict money management plan, because options are very volatile assets. They're leveraged asset vehicles that can fluctuate a lot more than stock or a bond or a mutual fund. So with that being said, you have to know that there is an opportunity to have a max loss. That's why whenever we do a trade update, there's a max loss. So the gap down yesterday on WIN was a pretty catastrophic one because it was about 9%, 10%, and it created a pretty sharp and quick loss that is difficult to recover from with options unless you're acting fast. What I mean by that is this gap down right here, that's now resistance. 66 is now resistance. It gapped down with a volume spike. That's more than the average that we've been in through here. The other volume spike, also a down day. Interesting. I still like the stock, but right now, short term, you got to be careful here. Got to be careful. You got to be smart. So yes, we still have this big base back in here, but if we're protruding down halfway through that now, as we are, now the risk could be coming down to 50, 51. All traders, all great traders take large losses like this that happen fast and fierce, and they hurt quick, because now the problem is, can we stay at this support level? That's the big risk. This is what I have to figure out. If I showed you the YM, which is the Dow futures, and I got to get these positions taken care of. So this is the cliff that we just fell off of, and just from 17,650 on the Dow to 16,300. So we've gone over 1,000 points down in the first couple trading sessions here. In the last, you can see consecutively, there's 1, 2, 3, 4, 5, 6, 7 consecutive down trading sessions. So you have to think we're going to see a bounce at some point. So we don't want to take off all these trades. I mean, that's the hard part. This is the hardest part of the business, is when you're not on the right side of the trend. Like if we were trading the downside with negative deltas, which we will be doing in 2016 and beyond, absolutely. Hoping for a bounce higher into the close because it was coming back yesterday. I was only down about 1,000 or 2. So that completely got wiped away fast. And this is the volatility. If you can't stomach this type of fluctuation, then just wait. Don't trade this type of environment. So there's a little bit of value in this, about 500. So this is almost a max loss on this trade, which is very rare on spreads, especially calendar spreads, because it's very rare to see this big of a move this fast. So the market is going to see a bounce soon. It has to see a bounce. It's just, you never know when it's going to happen. And of course, timing is everything. This position is basically worthless, except for these January 5, 110 calls that have 50 cents of value, or $250. So this is an example of a max loss spread scenario to where these sold puts are in the money. ITM, 0 days. That means you have to do something as a net premium option seller. The index options expire the third Thursday of the month. It's basically the day before the third Friday for regular options on indexes. So these have a -1 versus the Facebooks that have a 0 that expired today because they expired yesterday as index options. That's one of the things you learn in the Trading Mastery program. The 1135, 1140, these still have a little bit of value, but not enough to substantiate doing any type of new roll. So it's about preserving capital at this point. We could ride this one out. And when you're trading leaps, one of our luxuries as leaps traders is the time aspect that we have, being able to wait some things out, not being too stressed out, making short-term decisions on some of these different spreads that a different mechanic and a style than the longer-term leaps trading is. Time to regroup. You can't be emotional. You really can't. I've been emotional in the past. So you paid 2 cents here. I'm just going to start getting filled on everything. And you're going to see the whole thought process and execution behind managing positions going into the last 15 minutes of the day, just how hedge fund managers and portfolio managers and professional traders manage their portfolios. This is the last 15 minutes of the day where everything's legitimate. We're holding the 100, and sad to see because I'm a bullish trader, but now it's time to start switching my mind and switch the gears here inside the club to bearish deltas, bearish trading, bear call spreads. You're trading larger contracts. This is why smaller retail traders, you're going to have a lot more fun getting your fills because you're not going to be giving up 10 cents here, 10 cents there. Because I just changed 247, canceled, to try to get filled at 236. And now it's just running away from me. So, because that's what they're doing. The market makers see that I have large positions and they don't want to fill them at the right mark price. Sun Edison, I'm closing this out. I'm done with it. It's unfortunate that it has to happen this way, but this is sometimes showing you the nature of the beast. This is the other side of the business. You have to see this. So if it happens on my dime, so be it. But the fact that you're learning from these changes and how it's important to get filled at theoretical price, understand your risk, your max risk, how it relates to your overall portfolio. You have to be able to preserve your capital to trade another day. So there will be times that are going to be just fine, whether it's a week from now, a month from now, 3 months from now, whatever it is, to get back in on these. And if it costs a little more, so be it. But we'll have the confirmation needed to get back in with the confidence necessary to execute a smart trading plan. And that's what we're all about here. And that's what I'm all about. That's what I want to instill with these sessions.